in life ain't if you aim too high and you miss it. Your problem in life is if you aim too low and you hit it. That's, you messed up now. When you aim to the moon and you miss, you still amongst the stars. So it kind of keeps you motivated a lot longer, man, to help you push through. Because everybody's gonna have to have a push through moment.
So you wanna be normal.
All right, y'all, let's get started. Welcome, everybody, to the call. Can y'all see my screen?
Yeah.
All right. So, I don't know what everybody trades or what different pairs that everybody trade. I mainly trade US30, NAS, Gold, and GJ. If you got any other pairs that y'all trade, that y'all want me to mark up, we're gonna mark them up. But I'm gonna show y'all how I'm getting these calls, how I'm getting these plays right here. So that's what y'all came to the call today for. So this session is about how we getting these plays and how we getting this money, and I'm gonna show y'all how we doing it real quick. So we're gonna start from the top down. Okay, that's what all these markings is. The normal people who's normally on my call know that this is what all the markings is. It's from the top down. Meaning from the month. So we on the NAS, and we gonna mark up from the top down. I'm gonna delete all the markings. And mark it clean. Oh, I'm letting some other people in the room. All right, so you're on a monthly. So we start with the high of the candle, right? The high that I'm getting is over here, up here in the top. So up here you got your open, your high, your low, and your close. I'm gonna come over here and grab a horizontal line, and I'm gonna mark my high. The high, let me change this to solid line. And I'm gonna make it red. My monthly line is gonna be this color. So the high is 2186-001. And then I'm gonna do the low. And then the low is 19656.55. So we got the high and the low right there. And I want to grab the middle of the month, the midsection. So I'm gonna grab the fib and I'm gonna measure my fib from high to low. And I'm looking for the 0.5 area between the high and the low. To get it exact, I'm gonna put those numbers right here. The high and the top, which is 2186.01. And the low is 19656.55. On this one more time. Change this to the dash. This is my middle. And the 0.5 level is your middle. Right here, those numbers right here where it says 0.50. That's the mid area. So that is 19,921. .28. So I got my high, my low, my mid on my month. We're gonna do the same thing to the weekly that we just did to the month. But I'm gonna make the colors of the lines different. These is gonna be orange. So the low is 19,152.25. That's the weekly low. And the weekly high is 2105.56. Then we're gonna grab the
Damn.
do the same thing. 2105.56. 19,152.25. It's gonna go to the middle, which is 19,628.91. So once I got these levels here, I'm dropping down to my 4 hour, my daily. I look at my daily for the trend, and we can see that it's trending up. But these blocks that y'all see right here are order blocks. It's an indicator that I use to locate the order blocks. But if you don't have like the premium, or you have too many indicators on your trading view, how you will locate an order block is an order block is just the last candle before the change of direction, indicating the change of direction. So this is an order block because this was the last candle before the market stopped selling on a daily. So this is a daily buy order block, and this one right here would be in a daily sell order block up here. So that indicator that locate the order blocks is order blocks with real-time fib. I just adjust it to not show the fibs on it. So I just come in the settings and delete the fibs off of it, so it don't show fibs, and it just shows the order blocks. But it locates it on each time frame. But those levels that are marked up, those are your support and resistance levels. Okay, so from the weekly low to the midweek, this would be your support and your resistance. Once it breaks this, this becomes your new level of support, and this is your new level of resistance. Here, when it's below the midweek, you're looking for it to sell. When it's above the midweek, you're looking to take buys. As you can see, it bought from this it's been buying from this midweek area right here. That's how I was able to look and locate a buy happening on a 4-hour. Because it was rejecting from this area right here. And for entry, it's a certain, I know y'all all see I use Heikin Ashi candles. This works with Heikin Ashi candles. I don't use traditional candles because Heikin Ashi measures price action. So if you're trading and you're trading price action and you want to see a smooth trend on your chart, then you should be trading with Heikin Ashi because it's measuring the average of the daily average of which way the market is moving. So that's why I don't use traditional candles. If you see, you can see a smooth pattern when you use Heikin Ashis. When you see these here, the candles with no wick underneath, that's how you identify your trend as going up. If you see them with no wick at the top like this, that's how you identify that it's a sell trend. So it's easier to spot a trend with Heikin Ashi candles. You don't have to guess. You can look at the candles and the candles will tell you which way the market is trending.
And then when you stop seeing those flat bottoms, it can turn around.
So it's a pattern that it makes to let you know that the market is gonna reverse. That's what I was just getting ready to show you. You'll see it here. Like it'll make this pattern out of the Heikin Ashi right here. So what you would see is you would see something. Like this. You see this right here, like this doji or this doji type candle right here. It look like a plus sign. So you would see it do that, and it will be followed by a flat candle. Because you see all of this was selling. But this right here, this pattern that it made right here was the indication of the change of direction right here. And you'll see it happening here on a lower time frame, like I'm on a 30-minute here. So it happened here on a smaller time frame. But that's the indication of the change of direction right here. This candle pattern followed by the flat. Same thing here when it was selling. That's an indication. Those are your entries, actually. This is what I look for to enter. So I will look for it to do this candle like this with this flat. Yeah. So when you see that that pattern like this in a market, that's your pattern for entry. And I look for it to be retesting. I look for it to retest the order block before I enter too. So here it already made the retest. This was a retest on a 4-hour. Right here, it came to this level, the weekly level, right above the weekly level and didn't break. Right here. Y'all can see that? I came right there and it didn't break this level. So as long as it's above this level, I'm looking for it to buy. And it's been buying already out of this order block. I use the higher time frame order blocks as more of a confirmation because the volume of order blocks is like the volume of where the larger institutions are taking their buys or where the larger institution are putting their money at. So when you see these order blocks on higher time frames, this is where they trade. While you might trade the 30-minute, the 15-minute, the 5-minute, they're trading and they're putting their money on these higher time frames and these higher order blocks. If you go up in the time frame and you will see these order blocks on all different time frames. But on a higher time frame, you see where they putting their money at. So in accordance with news, you will notice news might happen around this area, but news is only going to happen in this area to like push it out. It's not, you can like, I can trade the news and know that the news is going to likely have a positive effect based off of where the order block is, based off of where I seen them put their money at already. Any questions? Otherwise, I'm gonna go to the next pair. This is where you, like, I'm anticipating Nas to go up into this order block up here. Like, you can use trade from order block to order block, but I'm anticipating it to come up here before it start rejecting, because this is area right here was where it sold from heavy before. This is where it sold from before, like heavy volume of sales. Came out of this order block. Or Nas. I would take it from the New York session. Like, I don't trade out of session either. The time I usually enter this would be on the 4 hour candle, the first candle in New York, which would be like around 10 o'clock. That's when I'm looking to take this. If I took, I'm like right into this order block here. After that, like 8:35. After it would be that's what I'm looking for Nas. This one I was already in. I got in down here at the the midweek area right here, because this is where it came into and rejected out of this order block right here, and came and retested the order block. It didn't break the midweek, and it bought right back. It bounced right up off the midweek area. So this was the one I took earlier, but you can get another position in. I can get another position in here probably tomorrow. I'll be looking to take another one. But another position. So I was scaling another position. Alright. And I'm gonna move this into profit. And scale another position and tomorrow. So for tomorrow, if you're looking to get in, you will be it's coming around now to the position. I want to enter to around New York session anyway. Yeah. DJ is rejecting out of this buy order block right here. So it's likely going to continue to buy. So I set my stops like underneath the order block because if it breaks the order block, then that will invalidate the trade. So that's why the stop is set under there. If I'm not setting it underneath the order block, then I'm setting it underneath the engulfing. And if you're not used to holding your trades for a long time, if you're not used to swinging and you're scalping, the levels you can use for your take profits would be like your midweek would be one take profit and your weekly high would be like a second take profit, like a second area for profit. If you're going in for like a quick position, you could, if you're trading in between those levels, then you can take profits in between these levels. You gotta trade according to your comfortability. Like, so a lot of y'all, I know some of y'all is not used to swing trading. So if you're not used to swing trading and it's not what you do, then you're a scalper. Then just scalp in between these levels. If you know that you're looking for buys, how you would use it for scalps is you would take it the buys in between those levels. Like, you know it's gonna buy up in between these levels, then you would take the buy in between the support and resistance level. Yeah, it's called order blocks with real time fit. Quant view. That's what the indicator is called. Oh, for GJ. GJ overall target is, this is the overall high where it's gonna come back up into this order block. Overall. So you can take buys as it goes up, but this is a key level here that it has to break this mid-month area. So this is actually a profit area where you could take profit at right here, because you might see some rejection here before it breaks this mid-month area. But I can put this on any pair or any instrument, whether I'm trading stocks, whether I'm trading Forex pairs, whatever I'm trading, I can put it on any pair and it works the same way. This is the buy from Monday. And never broke the order block here. And never left this order block from Sunday. You don't see it? The order blocks. Yeah, that's the right one. That's the right indicator. Order blocks with real time fit. Yeah, start. So locate, because that locates the order blocks on each time frame. Because order blocks can be located on any time frame. It's just that the higher time frame ones have a stronger there's a stronger order block. Like, this is where the institutions put their money on a higher time frame. So when you're looking at your daily and your weekly and your 4 hour, those are higher time frame order blocks. So those are stronger order blocks. But you can use these lower time frame ones as like points of entries on a lower time frame. Like, you can use them as entries on like the 15-minute. So you can come down to the 15-minute and it already have those order blocks there. Some 15-minute order blocks can be an entry. Because It's making that indication right there. That's the indication for entry. Thin top, doji type candle, followed by the flat bottom. But if it's a sell, it will be that candle followed by flat for your entry. It's inside this buy order block, has that pattern, and you know you're already looking for a buy. So you drop down to your 15 minutes to 30 minutes for entries. And Bitcoin is another one that you should be trading during New York session because you're trading USD pairs. If the banks is not open, you shouldn't trade this pair if the banks is not open. The banks is closed, you shouldn't be trading it. I know crypto you could trade on the weekend, but it don't have much. It's not like you're not missing no big moves on the weekend. I'm anticipating for it to come into this sell order block here. This is the buy from Monday. But it's never broke this order block. It retested. It's still continuing to buy. It's looking for an entry on it. I will wait for a pullback during New York session. It actually made a new weekly high. High is now 95,900. 95,900. What was it saying? 9680. Mm-hmm. 680.68. The midweek is 93,290.34. And for the monthly, I only mark the month up at the beginning of each new month. I'm not marking the month up all throughout the month. Unless it makes a new high or a new low within a month, I don't touch it until the next month. High is 7. Five, 3, 4, that 3, 4. Nine, 2, 6, 9, 1, 4, 5. Mm. All right, I'm gonna go over the order blocks again. Hold on. Mm, 754.43. So if you don't have that indicator and you was looking to locate an order block without the indicator, the order block is the last. The order block is the last candle before the change of direction. So if you're seeing right here, selling, selling, selling right here, it would be this right here would be the order block. This candle would be the order block because that's the last candle before it turned around from buying to selling. Because the candles are different size, the order blocks are also different sizes. Like right here would have been a buy order block because this is the last candle before it started buying. So this right here is a buy order block. Was candle. Because that's the last candle before the change of direction. And this candle here will be a sell order block up here. Because that's the last candle before it changed direction. And how you determine the volume of the order block is you look at the type of candle that's coming out of that order block, like the volume candles or the engulfing candles. So you want to look to see how strong that order block is, or if that order block is one that you could use. You look to the candles that came out of it, to the volume that came out of that area. Like this order block down here would have been a strong order block based off of the volume that came out of it. This small one, this small candle, because these engulfings that came out of it, like straw buy volume came out of this area. So even though it's a small order block, it's a small candle, the volume of buy that came out of this area is strong. But that's how you look. If you don't have that indicator on there, that's how you will locate your order block. Or with the indicator, it locates it for you on each time frame. I'll just remove this from here. Right. Yeah. Any questions? So, the recording, I'm gonna put the recording up on my YouTube channel. My YouTube channel is Queen30, and I'm gonna put the recording up after this class. It should be up within probably like the next couple of hours, so y'all can go back and rewatch the video. So, the bet depending on what time you what pair you trading will determine what time you should be trading. So any USD pairs should be traded during New York session. Any indices should be traded in the New York session. The most volume you're gonna get in New York is right between like 9 and before 12. And before 12, the indices start pulling. At 12 o'clock, when London closes, the indices pull back heavy. Indices, gold, all of that pulls back during around noon. This is the gold trade that I called out earlier this week. How many of y'all still in it? I don't know. I called this out earlier this week. I think Ellie was in this. But this one we took because it was coming off this mid, it bounced off of this midweek. It was in this order block. It didn't break the order block. It didn't break this buy order block. And this is where I'm forecasting it to go into the previous order block, which was the previous high. It's likely going to break this because gold has been trending since November 2020, November 23. It has been trending up. It has not came back down since November 2023. So, once gold reaches the previous high, it doesn't just pull back. So it might pull back a little bit. It's probably going to continue past that high. But that's the previous high, was like 3,500. This is what we got in at the beginning of the week. We took these buys based off of these order blocks, and it wasn't breaking it. It came and retested this order block and didn't break this order block. I was looking for gold to buy since last week. So I'm gonna go ahead and end this call. I'm gonna put the replay up. But we do these calls every Tuesday, these pop-up sessions. We do them every Tuesday and every Thursday. And I do calls on Sunday too. To do a more extensive chart markup. Okay. So this one is I'm gonna put the recording up on YouTube within like the next couple hours. I gotta plug my computer in. But give me another couple hours, it'll be up. I appreciate all of y'all for coming. Thank y'all. Thank y'all. Put this on y'all. Put this on with y'all trade, and I want to hear y'all testimonies because I know y'all gonna make money. If y'all use it, y'all gonna make money from it. I know it. So I want to on fact, y'all gonna make money from it. All right, y'all. Let's go.